So, hello, how's everybody doing? I hope everybody's having an awesome day. Welcome. This is 50 Pips, rocking and rolling, 2605 2014. So, as usual, we're not making any trade recommendations. We're here to perform some live technical analysis in a learning context for educational purposes only. So the fact that you're in here means you've read, you understand, you accept all the disclosure disclaimers on the site. Again, understanding that we're just performing some live technical analysis in a learning context for educational purposes only, and you're responsible for your own stuff. So welcome, happy bank holiday to the UK, happy bank holiday, happy Memorial Day to the US. Let's see what's going on. Squirrel on crack in the house. Rock and roll. So what are we going to do here? Well, basically, we're just going to hang around and look at some charts for a while just to get ready for the week. Spend an hour or so together. We'll see how long we need. And basically, the way we do this is fairly informal, right? We just first come, first serve. I'll just call out what chart you want me to look at, and I'll try and go through as many charts as I can. The only thing I'd say is if you ask for a chart, it's there on my Q&A, right? So I can see it, so you don't have to ask for it again. Just ask for it once. I've seen it. I'll get to it as soon as I can. So first things first, going into the week, nothing super duper exciting in terms of data. We'll go into tomorrow, and we've got some light data out of the US. We've got Draghi speaking. Then on Wednesday, there's some stuff out of New Zealand, and we've got BOJ Crude speaking. So basically some event risk overnight in that session for JPY, and then just some light EU data. So not a lot, and that will take us straight away into Thursday. And we've got bank holidays basically in France and in Germany, so it could be a fairly slow day. We do have some stuff out of the US in terms of data, so GDP and unemployment claims and pending home sales. So we could see some kind of movement, and then some more data into Friday, but nothing terribly exciting in terms of data. But we do have geopolitical event risk with the Ukraine, etc., and as more stuff rolls out of the European parliamentary elections, right? So we'll just try and go through the charts and see what's going on. Okay, so yeah, we'll go through Euro and cable, we'll go through CAD, we'll go through all the majors, right? Okay, so basically, first let's start with some of the futures, right? And what we were saying is that even though there were some interesting opportunities to get short tactically, it looked like the path of least resistance was higher. And if we were going to fail, we expected these to fail from a higher level, right? And basically, again, the ES, we've been talking about this boring range, 1900, 1850, 1800, and we said that despite the fact that we are getting some tactical opportunities intraday, all those dips keep on getting bought, right? And as long as those dips keep on getting bought, especially as that 1850 held, and we started to get all this sequence of higher lows, you have to respect this. You have to respect this action, and what it's pointing to is that most likely we're going to have to fail from higher levels. We're going to go back up and test those highs. So we went through 1900s, and now we're trading just above. In terms, just to give you two kind of levels we're looking at to the upside there, we've got 1916 and 1923s, but right here there's really no point trying to be a hero getting into big longs at highs. The idea is to keep an eye, look at how this is happening, look for, as far as we're concerned, tactical opportunities to the short side, but really not interested in buying highs, not trying to fight this. And as long as it holds above 1900, we'll have to see what happens. Usually, I think, if memory serves, day after Memorial Day tends to be positive for the markets, but the week kind of ends up negative. So we'll have to see. But clearly, right now the focus is on highs, and as we go into the beginning of the week, how well we hold those highs or not, right? And that's something that is fairly was fairly clear above the board. Another thing we said, keep an eye on the NASDAQ, right? And there were, again, right here, we had some interesting opportunities to look for tactical shorts. But again, we said you have to respect these higher lows, and these higher lows were pointing for us to try and make a move right back into our pivotal zone here around the 3660s. And this was going to be the new bull bear line or bull bear zone. So right now, as long as we hold above 3660s into the week, we'd expect it to try and rotate higher. Again, I'm not looking to get long. I'm looking for tactical shorts maybe, but more than happy to stay flat. But right here, as long as we hold above this, look for this to continue to try and rotate higher. And one thing which we mentioned and we said also in the last Outlook video, we said, if you're looking for clues or if you're looking for tells, keep an eye on the Russell, right? Because clearly the Russell had been leading and the Russell had been weak on some of the moves down, but what we said is we need to get a weekly close below this 50 moving average, right? As we're coming back into this support, you have to respect this support. Keep an eye on this. Failure to break below, to get a weekly close below and support here, we'd expect it to bounce off this level, and that's exactly what's happening. So it doesn't mean there aren't going to be interesting short opportunities up here, but right now, as long as we hold above, path of least resistance will likely remain to the upside, at least short term. Maybe into the end of the week is going to be a bit different, right? And you see that pattern pretty much across the board, whether you're looking at beautiful action on the DAX, right? All those dips getting bought, bam, broke to new highs again today. Nice little move. And whether you're looking on moves on the FTSE, again, FTSE's trying to base, not as strong, but we'll have to see how that opens tomorrow too. But that's pretty much what's going on the equity side. In terms of crude, we've been looking at crude for a long time, and we've been talking about possibly what we call a big cycle move to the upside, right? And we've been talking about this pretty much since last year and even before, this whole big move and this hold right here of these 74s that kept on coming back up. We got this whole 200-day moving average that kept on holding, and we kept on getting this series of higher lows all the way back up, right? So that's clearly in move. It's not we're not into fortune telling, but this would be pointing to 133s, but that's really far away. But I just wanted to talk about that a second because some people were asking. On a shorter term, what we had here, we had this more recently, we had this move here off those lows into those highs where price came right back into the 50 back, and we had a nice little confluence of this 100 DMA right here, which held it. And again, consolidation, trying to break higher. The current target for this trigger and this move is basically 108.50s, right? And you see that this whole move's been fairly structured, right, with nice support holding. Now, ideally, if you're long, what you want to see is you want to see this continue to break high. You want to see this 100 cross the 200 to the upside and then hold. So that will mean that, making higher highs, then on every bounce, we can keep on holding this higher low scenario to continue to rotate back higher into those 108s and then potentially those 112s and higher. But basically, on this chart we have been looking at for quite some time on crude, not a lot has changed really, okay? Gold. Actually, sorry, this is a trading chart, shorter term. Let me get onto the bigger chart we've been posting on the blog. What's been going on? Not a lot. It's just one of those scenarios where it's just stuck in a range. So, sell high, sell the highs, and buy the lows. If you're trading it intraday, that means, pretty much anything into those 1310s, it's pretty much been a sell, and anything into those 1280s has been a buy for a move back into that 1300. Really not something I would trade in terms of scalp range, not something I'm really interested in looking at, but that's where we are. The moving average is flattening. It's just stuck. The way we look at this, we'd expect the downside to be relatively contained and to keep on finding bids even if we should get an aggressive move lower. So we expect this ultimately to rotate back up and try and take a stab into the 1350s. By the way, shout out to Miss Gold. I can't remember if I did a little shout out to Miss Gold, but we'd expect it to stay supported. But there's really not a lot to add here, and we've been looking at this for quite some time. Yeah, sure. And silver, we don't look at it a lot, but silver is really not that interesting to us at the moment. As long as those lows hold, we expect this to try and rotate back up to 2060s and possibly back up to 2020s. It really needs daily closes or weekly closes above those 2220s to have pressure off. Right now, it's holding that downside support, which is highlighted in that blue zone, but really we look at those 1820s as the base support. But this doesn't look like there's a lot of flows. It really doesn't look like it's the priority here. So if trading the metals, I'd still rather trade gold and silver until things start to wake up a bit more. We start to get a bit more volumes. Right now, this is really not a chart I would be too interested in trading. Okay, now let's start to move back into the Forex. So a lot of people, again, a bit surprising to me, but a lot of people looks at so far, people have asked the most is about USD CAD, right? So what's going on USD CAD? Well, right here, as far as we're concerned, not a lot is going on USD CAD, and it's really not a chart that we're too interested in, simply because it's just a sideways chop. If you look at it even here on a weekly, it seems to be trying to find some kind of support at highs, but it's really struggling. Okay, those two moving averages are far away, so there's clearly quite a lot of room to correct back to the downside. If you look at it the daily, right, it's just chopping around, right? It's let's clear this up. It's just chopping around, and not a lot is happening. You know, if you're looking to get long, clearly you're in a support zone, but with the 100 and the 200 here, but you want to see a much stronger move outside of this support, right? So the fact that it's holding inside the support zone doesn't bode too well for the longs, right? The way we would look at this is, you know, this low here that we dip below being the pivotal level, and we call this pretty much, if you want, a bull bear line here. So having said that, the chart is simply not that interesting for us. A hold above here on the daily, we would expect it to try and make runs to the upside, and it will probably find that 100 as resistance. And a daily close below this level, we'd expect it to try and make a run down to the downside, and I'll probably find this 200 DMA as support. So it's really stuck there. So unless it makes a move outside those ranges, is really not that interesting to us. I don't know if that answers your question, Don, or especially because you're the first one to ask. Or if you have another question on the chart, but that's pretty much the way we would look at it. So not too interesting, not a bit choppy, inside range, a bit heavy, sideways consolidation, a bit of a heavy tone on the chart, but not too tradable for us right here, right now. Okay. What's going on? Well, you know, EJ is another one a lot of people are looking at, is basically hovering there, and we talked about a couple of pivotal levels. You know, we talked about EJ as being an interesting trading vehicle also in this chop range, right? And the point here was try to trade the range, you know, with all the moves outside to the downside and all the moves upside here, where we couldn't get a daily close outside to get short or long those for a move back in the opposite direction, right? Just scalping moves in the opposite direction of failures to close outside this box. Once it closed outside the box, like, you see what happened. You know, support broke, support acted as resistance, and we made our move right back down into the next pivotal zone, right, which was at 139. It tried to catch a little bid here, and we said keep an eye, because this is a pivotal zone, but the base support is not below this wicks. The base support is going to be, you know, not only this support further down here, but it's really all about the moving average, right? So if you're looking to get long, really you'd have to play it a bit wider with stops behind that moving average to be in a bit more in bracket safe area. And right now what's happening is, you know, that's holding. So look at this as a really important zone intra week, okay, going into the week. So the way we'd look at this is, as long as we get daily closes above this 200-day moving average, even though this is a bit sloppy, we expect this to stay relatively supported and try to take a stab back into the 140s, 140-20 zone. And if we get a daily close below that 200-day moving average, then we'd expect it to try and make a run back into the 136.20s. Okay, so looking pretty much yeah, it's a wide zone, right? You know, let's be clear, it's a wide zone, but that's simply the nature of the beast here. And the wide zone is that as we trade around here, we've got about quite a bit of move to the upside and the downside, being the downside below that 200-day are those 136s, and a hold is right back into those 140s, right? So it's a key zone, but again, I wouldn't get too obsessed or too focused on the 200-day. it's important, right? It's an important one, and it hasn't been touched for a long time. But usually, if you're trying to play aggressive trading strategies off these moving averages, you want to go for the clean touches and pulls away, the clear reactions around it for the first time, not once it starts to be in a choppy zone. It's very tricky to trade these when they're starting to push up against below or above, you know, a sideways chop, because you get a lot of stops around there, and you know, slower market, you know, everybody falls to sleep with no volatility, and then bam, it can come right back into the market. It just can't get people off guard. So what's a lot more important in this kind of market is not necessarily the touch of the levels, but is the daily close above or below them. Okay, does that make sense? Yeah, I'm recording this. I'm trying to I'm actually recording it both on the Adobe and on another software, so hopefully I can publish it on YouTube, because it's much easier for people to look at it and skip through it than on the Adobe software, right? If we get a daily close above the 139 on EJ, does that mean that the 200 DMA will not be tested anymore? Well, that, you know, no, not, you can't make any kind of definitive statement like that, because anything can happen, right? So it's not because we close above the 139 that the 200 can't be tested anymore. But if we get daily closes above the 139, what would we would expect that there's more chance of us seeing a little relief move up than a move back down. If we close the day below that 139, then we expect there's probably more chance for us to test that 200 before we go back up. Keep in mind, on any move back up, that breakdown zone is going to be resistance now for a possible move back down or a break higher. But this is now the key level, okay? Make sense? Okay, rock and roll. How's Debbie doing today? Okay, good stuff. Debbie, are you ready to take on the role of official timekeeper to remind me if I lose track of time? Would you do me the honor of accepting? Okay, yeah, what's going on? Aussie, yeah, sure. It's really funny. A lot more people interested on these other pairs than Euro and Cable. Thanks, sir. So what's going on Aussie? So Aussie, basically, you know, we're right back around, you know, and all these pairs, you know, it's quite tricky because all these pairs are right back around these 200 days. So a lot of people thinking that they definitely have to make a move or something, but, you know, it's a very different scenario, right? Keep in mind that you know, let's take a look at Aussie, right? For example, Aussie, you know, it's a much different scenario than here, right? Here you get an aggressive move right back into that 200-day, which was the 50 back of this move, confluence, a pure level that hadn't been touched for a long time, right? So what you have to keep in mind that, you know, when you've got a market that is moving straight back into one of these key zones, but you see it in a more of an impulsive manner, but at least, you know, it's going pretty clearly in one direction, whatever that direction may be, right? This is a very different kind of move than when we're going back into a moving average, but it's been a sideways chop. Does that make sense? Thanks, Debbie. Right, does that make sense? How do I see copper holding up? I don't have copper here, I don't think, unless somebody can tell me, but I don't think FXCM has copper, so I can't really, I can't put it up, I'm sorry. So right here, what's going on is, so let's see how this behaves. Clearly, we're into a very, very strong support, and it's going to be key. The way we're looking at this is that this is a strong support, less interesting as if it was a pure move back into a moving average, but we're looking at it as a zone, right? So daily closes above this moving average, this whole 91 to 60 zone. We're looking for this to stay a bit bid, right? And daily closes below the 94 is a bit heavy, right? Keep in mind there's strong structural support to the downside and there's strong structural resistance to the upside. we expect, and we've been talking about this for a while because of all this wheeling and dealing with, expectation for interest rates and God know what, what's going on in New Zealand, etc. We expect Aussie to stay relatively range bound unless you get some big news or something coming out of the market, something big coming out of the RBA. So we think it's more of a tactical intraday play than necessarily a pair to be positioned for bigger swings. So it's not something that's too interesting to us. So we'd expect to see chop here. And the problem is if we break higher, there's strong resistance here and we'd expect this to globally hold. If we break down, we'd expect this to globally hold. So again, not for a cop out in terms of ranges, right? But we'd expect this 90 to 96 kind of broader range to hold, right? So we don't expect any huge move out of here unless there's strong policy change, right? So right here, it's a bit of a range trade and that's the way we're looking at it. So Jay, I don't know if you have a specific question on that chart or if that's answered your question, we can move on. Yeah, you can ask for any there's nothing's off limits, any pair I have on the platform here, on this demo platform, I'll bring it up. I really don't. I'd prefer to look at the majors than the funny duddy pairs, but anything anybody wants to look at, I'm more than happy to take a look at. Yeah, similar, it's part of all these pairs that I personally don't find very interesting where they're trading now. If you look at Kiwi, what's looking here, right? It's a very strong support. So this is a very strong support. As long as this hold, expect it to catch a bid. But what's the problem here is if you break lower, you've got strong support below this base support, right? So it's a bit tricky. So right here, we call this pretty much the pivotal level, the bull bear line coming in around, those 86.30s. So as long as it holds below here, expect this to trade heavy. If it trades back above, expect it to trade higher. Now, a lot of wheeling and dealing on interest rates expectation, but especially if they're the first raise rates again, we'll tend to see a little pop. Right here, not that interesting. Clearly, the way we usually like to say is gun to my head. I would not be getting short here. If I were looking to get short, gun to my head, I need to get a little pop, maybe a little move back into this base, what happened, sorry. This base resistance, right, to then place some kind of a move lower. I don't want to get short into a key support, right? So if anything, we'd expect to see some kind of a bounce here. We'd expect that to be the more the healthier move, but we really have to wait and see. But I really don't think that the chart is especially interesting right here, right now, okay? And that means, if we translate that to AUD, NZD, everybody's been trying to get long, pretty much since 114th, right? And what we said, once it broke down, we said there's no point trying to catch this, right? And sooner or later, somebody's going to end up like a hero getting long this pair. The question is, at what cost? As far as we're concerned here, there's really no reason for shorts to get off this this southbound train, right? We've moved back down and we're straying into this place. So we're much more in favor of selling any failures at highs. There were a lot of interesting opportunities here to get short just tactically inside this range. And this is really a sideways chop similar to Aussie. So as long as we stay inside this sideways chop zone, we don't expect to see any kind of aggressive move. Now, if we get a daily close above the 109.60s, that's probably going to be also maybe some kind of policy issue or something. So we could start to see some of these shorts off this big move starting to take some profits, and we could see a nice little squeeze, a nice little profit-taking rally from the short side. But unless we close outside this range, we expect sideways chop inside the range or trying to continue to move further down, right? Yeah, what does that translate to in terms of, hey, thanks, man. Hey, Jimbo. So how does that translate into NZDJPY? NZDJPY. Do I have that chart up here? Or do I have to get a new chart? Let me just look. NZDJPY. I have a feeling I'm going to tell you it's not that interesting of a chart, but let's look at it. Globally speaking, just to make things clear, right? The way we're looking at this, and we've been talking about this for a long time, is that when we're not huge fans of playing against central banks, right? Fighting central banks. So as far as JPY pairs are concerned or CHF pairs are concerned, we're not big fans of getting long yen or getting long Swiss franc, okay? Having said that, we'll look at the chart. So, okay, I thought I was blind, but here we go. So, do you have a specific question on the chart? So this is the monthly chart, right? So it's clearly catching a bit of a bid here, and it's holding very similar to NZD USD. Again, you know, any strong opinion on NZD, we'd much rather play it, express that opinion through NZD USD. So, you know, a major pair, more liquid pair than trading it here. But, you know, I don't know if you have a specific question, but here it looks like it's holding close to highs, right? You know, very strong bid. And you see that even though it's been struggling a bit, all these recent dips keep on getting bought, right? So right now, especially if you look at it here, we've had this strong resistance we broke above, right? And I think we don't have to be a rocket scientist or subscribe to any expensive newsletter or anything to see that previous resistance is acting as support here, right? So as long as that previous resistance zone continues to act as support, continue to expect this to try to rotate to the upside, okay? If that previous resistance that is now support breaks, then we could see some kind of retracement to the downside, right? And on the move to the downside, what you'd probably want to keep an eye out for, you know, are all these strong supports and see if the market catches a bid there, right? You know, another thing you could do is look at the 50 back of this extension move to look for some kind of support, and you see, you know, the next round of support would probably be coming in back down in the 82s, 80s. But again, it looks like it's holding highs and it's trying to hold this whole area. So we'll have to see how it behaves here, you know. On the daily, it's a bit, you know, it's all about that resistance zone, previous resistance that's now acting as support. So we really have to see how it starts to behave around there, you know, probably give some kind of clues. Okay. Yeah, similar on yen, right? Well, you know, if you look at the weekly on yen, you see it's making these moves up, right? Consolidating, bam, breaking higher, consolidating, bam, breaking higher, and it's trying to hold the support here, even though it's doing so in a sloppy manner, right? So again, we're not huge fans of getting short this or getting into long positions on yen. So we're still looking for this to move to the upside, right? So that's the view on the weekly, right? This is a bigger view. If we're looking at a move on a smaller time frame, you know, on the daily, you know, there are a lot of chances, beautiful opportunities, and we talked about this on the blog too. I think I did a free trade video on this, you know, a beautiful chance to keep on scalping the long side on all these moves into this tight zone, you know. And what we said is once this zone doesn't hold, then you just got to wait to see reaction around that 200-day, right? What have we been talking about, and what did we talk about since the beginning of the session? We discussed that when we're in sideways chop zones or stuff like that, you know, not all trades, not all indicators are always equal and should always be looked at in the same fashion, right? Now that this zone, the 200s, when it's not a pure touch, when it's a choppy market that comes into them, you don't want to play the touches necessarily. You want to play the hold above or below, right? So you want to look for follow through, fake outs, etc., etc. So right here, what's happened, we had this move back down into the area. We got a little bit of a touch, and then we had very, very, very choppy action, right? Failure to, again, here we held, a lot of longs came in, and it tried to hold for a couple of days, and then bam, you know, clear little stop hunt to the downside. And what happened, you see that we come right back down into this base support we'd been looking at, right? Remember, after we broke very aggressively to these highs, what was the lowest point of support before we continued to try to break higher and make these highs? That's it, right? So this is really the key support to watch below this tactical support zone, right? And what happens when we come back in? Bam, we try and flush all the stops. This area, 101.00s to 173s, right? It holds, and bam, we get a positive close. So, you know, if you keep your stop tights, even if you're trying to play this first reversal candle and you get stopped out, it doesn't matter. But bam, this is a much higher odds signal. Now, you don't, when this candle happens, you don't know that you're going to get that, you know, in 2 days time, you're going to get an even higher odds candle, right? Because of course, nobody has a crystal ball. But if you're trading tight and you understand these setups, this gives you a chance, even if you get stopped out, to get back in on a much higher higher odd setup than the first one, right? And bam, then you get a nice little pop, right, off that move. You know, it's trading about 60 plus pips, almost 70 pips higher off that move, right? So clearly, as long as this base supports here, we'd expect it to try rotate higher, right? So what are our levels to keep an eye out for here on the chart? What we're looking at is basically these zones right here. Hold on, let me just put them on so you've got the levels so you can see them better. So we've got the first zone, you know, these are the two pivotal, so 102.66s and 101.80s, right? We've talked about these on Twitter too for a while. And so basically those are the two pivotal levels. Clearly there's going to be a lot of wheeling and dealing here. We'll have to see what happens. So it's a bit of a sideways chop. We're not huge fans of trading sideways chop. You know, pressure's trying to be kept on. This is a similar chart to gold in the sense that it's chopping around that 200. That 200 is starting to flatten out, but we'd expect this ultimately to have some kind of bid, you know, whether that's a semi-official or official bids on market supporting. We'd expect this to stay supported. We don't think, like gold, we don't think it's a chart, or like EJ, that favors trying to scalp tight with tight stops inside the range because it's way too whippy. We think it's just not worth the effort, right? So that's the way we're looking at USD JPY. I don't know if that answers your question or not, but I think it should. The 100 MA is interesting on this chart too. Well, why don't we put it on the chart, right? Let's put it on here. So what's going on here? Let me put the 100 on. There we go, right? So what's happening here, the 100 is going to be base resistance, right? In this kind of action, you know, we're not huge fans of looking at these moving averages. Again, as we said, we like first touches, right? Thanks, Debbie, because it's just very, very choppy. So, and you see what happens, you know, that, well, basically we don't need to have that 100 on because it's pretty much that zone. But, you know, more than 100, again, Mark, it'll give you a good idea for a zone. But don't be fooled. The resistance is not that 100. The resistance that needs to be protected is the spike high, right? So again, keep in mind that inside these chop zones, you've got much better edge, especially to construct some kind of trading strategy in terms of stops and TPs, looking at the price action and the spike highs than a moving average in a zone that's really choppy and that's being pierced a lot. Does that make sense, Mark? So again, what we do is we construct the charts and we have zones and we have levels and we understand when we're probably better off looking at the levels and looking at the MAs. In any case, the MAs are very, you know, unless somebody's trying to sell you some crap on a blog, on a book or a signal service, you know, the EMAs in terms of no level are extremely difficult to trade, trigger trades on or whatever. You know, they're good to give you an idea for zones, right? John, you don't need to raise your hand. I don't know if that was a mistake. You can just ask a question in the Q&A session. Don't worry about it. Just ask away. Okay? What do I make of the European elections? Again, I'm really not running a political webcast. So all I care about are the levels and the text, really. Okay? What else have we got? Shoot. Would you believe nobody has asked about euro or cable yet? That's a very interesting sign, right? That's a very, very interesting chart, right? Do I think that USD JPY will trade lower before making a move higher? If it holds that base support, no. We'll have to see if it holds that base support or not, right? GPB, JPY. Do I have that up at all? Okay, there we go. So GPB, JPY, what's going on here? So we're hovering, not a lot's going on right here at highs, right? You see this very aggressive candle coming in. Beautiful little long setup right there that's still holding, and that's the base support. And we've got that base resistance holding back up here. So it's really in a chop zone, right? This is a weekly. If you go into a daily, you see that what we've highlighted here with the circles is basically the shorts are trying to keep pressure on. They're trying to cap, but those dips keep on getting bought. Now, this is just a sideways chop here. It's very difficult to trade because, you know, it's just anywhere inside this 174 to 163 is just very, very, very choppy. You know, you could get long with a tight stop, get stopped out, and it still goes higher. You can get short. You know, it's very, very tricky zone. Not something I would be too interested in trading. It looks like the shorts are probably trying to defend that spike high, right? You see every move there, and probably any move into there with failures just ahead of those highs is probably an interesting tactical short. But right here, it also looks like the longs are really continuing to support the grind higher. So we'll have to wait and see. I don't know if you have a specific question on the chart, but you know, it looks like we've got two levels here of this resistance, and you got that base support. But here is clearly an area where I would say don't get confused about velocity of move inside range, because unless we get a sharp break outside, it probably doesn't mean anything. Here, I would tend to say it's starting to look similar to something like the NASDAQ or some of the equities, where we would say it looks like if it's going to fail, it'll probably need to fail from a higher level. But, you know, let's wait and see what's going on GPB across the board as we go into the week, right? Do I pay attention to the actual closes? I think if you're looking in terms of actual closes, the most interesting for me, at least, or I would say in general, if your question is referring to daily candles, would be New York close, to look at the daily candles on New York close. How often do I do the Q&As? I used to do these every I can't remember. I used to do these every Sunday, right? Until a year ago. Debbie can help me. Did we do these once a month, or I think we did them every Sunday for about 2-3 years, and then we did them for a year or so once a month, and now it's just random because everybody kept on saying, the people that missed them kept on saying that it was a pain to go through the recordings because they were like an hour long or an hour and 15 minutes. So people preferred the 15-17-minute YouTube videos I do, so they don't have to show up live and they can catch it. It's a lot more digestible. So that's pretty much the history, I believe. Yeah, we looked at the DAXs and the equities first thing, so it'll be up on the recording. It's really the first thing we did. Okay, thanks, Lewis. Guys, on the questions on ruble and peso, that's really, I'm going to leave it until the end if we have time, because they're really peak polite, not interesting for me to trade, right? So, right? Yeah, Jimbo, I think a lot of people like that. That's why we're looking at those, right? So hold on, let me see. Yeah, CHF, again, I don't think they're too interesting here. One thing I would say is in terms of, again, for the reasons we discussed before, right? But you see, Swissy's basically pressing right back up, and this is a very interesting resistance. Again, I'm not a huge fan of getting a long CHF simply because, as we discussed, I don't really want to fight against the central bank. But really, here is a strong resistance. So again, gun to my head, I'd be looking to trade tactically to the short side, not necessarily to the long side here. But right here, it's just in a chop zone. It's been in this chop zone for quite some time, you know. I think look at this 200-day to give you room. You know, we could see on aggressive moves, you could see potentially a spike right back into that 91 level or close below here. We could really see this trying to move right back down into those 88s. But again, it's one of those pairs that I would expect to stay relatively range bound, right? So not necessarily too interested in trading this unless it is the extremes, right? And what I mean is on any move down into these lows or new lows, fake outs, aggressive wicks to the downside, it starts to catch my attention to the long side. And maybe on aggressive move to the upside might catch my attention to the short side, but it would be for a very tactical short-term trade, much more preferable, or I favor not doing anything only if I get a chance to maybe get long here. So it's not something I would be trading actively. Something I would be really keeping an eye out, but I think these pairs also in terms of charts are going to be interesting on the next ECB meeting, right? Because depending on what happens, you know, whether we get a rate cut, not rate cut, interesting, you know, market meets expectations or not, or whatever, out of Draghi, I think on those days, whereas in the past it's purely been a euro watch for myself. You know, we've been focused on that. I think all of a sudden into the next ECB meeting, all of a sudden in terms of trading charts for the day and focal points, CHFs are going to be a lot more interesting too. So that's something I would keep in mind. But again, even on Euro CHF, it's just about that base trying to be defended. Really, not too interesting. But you know, clearly something you can, you can look at, right? Again, let me go through these questions. Why is the ECB comment on the euro being too high a fundamental game changer on the euro? Why would Super Mario do something to weaken? That's a long question. Why would, yeah, and again, we talk about technicals here, but you know, basically the whatever it takes speech on the euro wasn't trading at 140, right? So again, globally speaking, nobody wants a euro trading at 145 and nobody wants a euro trading at 125 in terms of in Europe, right? So most likely in terms of that, what we'll see is we'll see some kind of juggling, and broadly speaking, you know, unless something really out of the ordinary you'd probably expect to see euro continue to trade around 140, 135 kind of broader range. Okay, but that's, I think the question's really not pertinent to the webinar, right? But you know, we'll have to see, right? So hold on, euro and cable, yeah, sure, okay. Just going through some of the questions, guys. 2 secs. Let me just see if there's anything I missed in terms of the funny duddy pairs. Okay. Yeah, technically, I think that's a good segue into looking at euro, right? What's going on euro? Well, basically, we have a fairly familiar chart on euro, right? And then this is our broader chart we've been posting for quite some time, right? No secret, we've been bullish on euro. We've been looking for it to print into those 139s, 140s, etc., right? We finally made its way back here, and right here we're what we call a big broad chop range, right? And what that big broad chop range is essentially is you've got those 139.60s and we had those 166.60s, right? And what we said, you know, especially into the ECB, etc., the play is to fade these ranges, right? Failure to hold out to the upside, short for a move back down. Failure to hold outside, long for a move back up. So right here, what's happening is we've come into this lower end of the range and we've tried to hold it. And in low liquidity chop, it's not getting any traction, right? Also, it's coming in line with a lot of holidays and a lot of geopolitical risk. So clearly, it's having a bit of trouble here. Now, also remember what we said in terms of these plays. You know, when everybody's getting really excited about the 200 DMA, you want to look for closes, right? Holds outside, below, or above. Right here, what happened is, again, on Friday, very slow day, most people on holiday, euro pressed below, just cleared some stops and closed just a tiny bit below that 200 day. It's all the way right back up. So right here, in terms of short-term trading, you want to look at Friday's range, right? If we close above Friday's range, essentially pretty much you should see some kind of relief rally, but you really don't want to be over trading it today, looking at too much today. You want to wait to see flows coming back into the market tomorrow, also US flows, okay? So clearly we're trying to hold this 200 DMA, we're trying to hold this base support, and it's holding relatively heavy. Okay, we'll look at a shorter time frame in a second. Keep in mind that right here, for the shorts, any rally back up into this 37.70s, 38.80s is going to be a short sell for pretty much the majority of the bears in the world, right? You know, they're going to be looking at that as a sell zone, right? We talked about this area last week too in the last update, and what we said is once we were holding here, the natural tendency was to try and play some kind of a move back into this zone and then get short for a break to the downside, okay? The fact that we have broken down for us now means that the shorts here are kind of lower odds setup. So here we would expect, if we're going to move aggressively to try and take out the 135.60s or the 134.70s, we expect that to happen most probably without moving back above this 100, right? Without printing back into those 37, 70s, 38s, etc., unless it's on volatile news or something like that. But globally speaking, if we get back there, we'd expect to see a lot more pressure to the upside than if we just gone right back up at the beginning of this week. Okay, so that's pretty much where we're hovering here. Now, in terms of a shorter term chart, maybe because that might shed some more light. And I don't know if anybody has any specific questions on the chart, please shoot, right? So if you're looking at it here, we looked at that on the daily, and you see it's fairly clear, even without just looking at a naked chart, that there's a couple of base supports, right? This is a base support here that broke. Got some support coming up. Market unable to hold below that. And then we have to go much lower, as we discussed, to find all these bases where the market rallied up from, okay? So what you want to look at going into the week, you know, if we look even at a 4-hour or a 1 hour, you see what happened. We started to come back down, and this was that first breakdown point, right? We tried to hold it, right? You see this reversal candle on a 1 hour, and what happened? Bam, we broke below, and all of a sudden, bam, market goes sideways chop. What do you expect in this kind of market? Sideways chop to continuation of the most recent move. Sideways chop, bam, we break lower. What happens? We hold in a sideways chop lower, bam. First time we get failure to hold, and we move all the way right back up. And that's when everybody was expecting some kind of a bounce, right? Well, most people, ourselves included. We go sideways, 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 sideways. We break below again. Oops. We break below again, can't really hold, and then into that we get this sharp little move lower. And again, it's a fairly controlled, you know, probably in a slow market, a lot of, you know, also maybe some algos or, you know, aggressive play, just pressing it lower, 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 lower. Now, the big question is, if we come back into the week as volumes come in, right, and this can't catch new sellers, what would we expect? If you see a little spike, the point is, don't expect this to necessarily have to go back to 150 or 140. Remember, it's just likely going to go back into this sideways chop zone, and it's going to be much to do about nothing, right? However, so here it's made series of lower lows on these three, but if we move back here, understand it's still going to be sideways range. For this to be pressure off from really some stops to get clipped, we need to get back above that whole breakdown zone, right? So that's why we said if we come back above those 3770s into 38s, we'd expect the shorts to have lost a lot of aggressive power and traction, so we wouldn't be surprised to see it rotate back higher. We think if the shorts continue to have traction, we'd expect them to come in and not let it come back, and that's why that's going to be our pivotal zone. Does that make sense? So if we go back into this area, you know, we could say is effectively, you know, as long as we don't get daily closes back above there, heavy, we get daily closes back above, starts to be pressure off. That's going to be the pivotal level for the week. And the downside supports are going to be those 3560s, 3470s. Does that make sense? Any comments, any questions? Thanks, Debbie. Debbie, that never gets old. You could be writing that in 10 years' time and I'll still be cracking up every time I read it. Okay. So, good stuff, Lewis. What's going on cable? Do I consider 3960s to be a double top on euro? Hold on, let me get the chart back up. 39. Oh, you mean that press. So do I consider this as being a double top? Yeah, double top. I mean, it's an easy call now, but the question is not so much is it a, you know, the point is I didn't necessarily call it a double top because for me it's not a really, it's kind of market what I would look at it in terms of double tops. Anyways, I don't usually use that kind of tendency. But for us, it's just, yeah, if it's a second failure at highs and we'd expect it to test the opposite side of the range. But yeah, you can call it a double top. But the point is the whole market is being very rangy, right? It's not a really clean trending market. You see that? It's not really clean. You do have higher highs and you do have higher lows, but it's still very, very choppy. So that's not the kind of market where you get like, you know, on something like Aussie or pound to a certain extent where you get a clear double top. It's very, very choppy here. Even, you know, this move here was a new high, but really didn't get any traction on all those new high prints. You pretty much had what, like, you know, 130 pips of high prints that didn't get any traction. So I wouldn't really be looking at it as a big double top, something like that. But, you know, sure, you could look at, for me, it's just a failure at that range, and we just expect it to be choppy inside that area. Sure. Yeah. Okay. What's the chop strategy? Well, the chop strategy is, well, again, I don't necessarily want to talk about trades here, but the way we look at it, right, is, yeah, this is being recorded. Yeah, don't worry, you'll have plenty of ways to look at it, Alex, no problem. You know, the way we look at it is that when the market is chopping in a sideways zone or in consolidation or in a range, the way we look at it, Jimbo, is that we say, don't be confused by velocity of move inside range. So what that means is that we feel that our odds are far better in being active at the extremes, okay? Now, whether that means, let's just try and make it a bit more visual. Forget the chart. I'm just going to clear some space, right? If we're chopping around in a sideways range, we think you inside the range, you've got very little edge. So we feel there's more edge playing the extremes. Now, whether that means shorting failures at highs, buying failures at lows, buying breakouts, or buying, you know, that's up to you and up to what strategies you prefer, even though we prefer to stay inside the range than breakouts or breakups or breakdowns or whatever. But in a sideways range, it's not that we're not active, but we feel there's little edge in the middle of the range, so we tend to favor the extreme. That's all, okay? Does that answer your question? Thanks to my super little drawing. Okay. Sure. So, yeah, let's do one more chart. Let's look at cable and then we'll call it a wrap. What's going on cable? So cable's interesting here. And the way we're looking at this, we're looking at this dip into the 167.30s or 29, whatever you call it. Basically, the protection of this support and this 50 back of this move from highs to low as giving us the potential for us being in the renewed swing for a final move all the way back up into the 171.20s. Okay? Now, inside this whole range here, it's going to be very, very choppy. But that's what we were looking for on this little move here. Now, there was one possibility on this sharp breakdown was that sellers would come in on the 50 back of the move from highs to lows. And you see right here, the sellers tried to cap this. But the fact that this broke up and broke the 61.8, broke this fib, to us gives us even more conviction that we need to go higher. Whether that means all the way into the 171s or whether that means failing from a higher level, that's still to be seen because nobody has a crystal ball, right? And that's why for us, on this most recent move in terms of a more dynamic or more tactical, even though it's far from being pure, you know, the dip the other day into the 168.20s, which was already a pivotal level, was a buy, not a sell zone for a continued move higher, right? Now, right here, just look at this as we had highlighted as being a very tricky zone, right? Anything going into the week all the way, you know, call it 68.50s into 68.00, this 50 pip range here, expect it to be very choppy, and we need to see either a hold outside for more bullish tone to come in, more buyers to come into the market, or a daily close below this zone to see more selling pressure coming in. So this is, again, starts to be a bit of a choppy thing. We'll have to see how the market goes on, but consider this 50 pip range a very big chop zone for the move now. And should we start to get daily closes below that, then we would potentially expect to see renewed wave of selling, renewed wave of pressure on for a move back down into this key important support. And whether we get a daily close back above, then we'd expect to see pressure on back for a move back into that 0.0 mark. So the way we're looking at it, daily close above 68.50s, pressure to the upside for a move back into the 170s, daily close below the 168.00s, pressure on for a move back into the 167.20s zone. Does that make sense? Yeah, gold is that beginning, Deb. We did, Don, we did all the futures at the beginning, right at the beginning. We did all the equities and futures, so gold and crude. Okay. Okay, rock and roll, guys. So again, hope you liked this session. Let me know if you liked it. Again, if you enjoy these sessions, again, when we post it on YouTube, don't be shy about liking it, retweeting it, or whatever. And again, you know, the more we see, you know, if I see people liking these, retweeting that, it means it's worth my time. I'll do more of these, right? If nobody's likes them or nobody can be bothered, then there's no point me doing a ton of these. So again, as always, your appreciation, if you show your appreciation, that's welcome, you know, not free sessions and all. But again, have a great rest of your Memorial Day bank holiday. See you guys tomorrow for London Open bright and early. Thanks a lot for spending some time with me. Thanks a lot for flying with 50. See you guys soon. Keep it tight. Have an awesome one. Take care, guys.